I mean, first of all, she's the first Commerce Secretary to go to China in 5 years. Anthony Blinken was there earlier in the year. And the bottom line here is the diplomatic measures have almost seized up. So the fact that this is being described as communication and just diplomatic dialogue to explain, hey, there's things that we need to do. We're not trying to keep China down in the world order. We recognize we are competing on a global stage for certain things. I think that's a great idea. I actually think diplomatic procedures and dialogue in bilateral relations we have with a lot of countries in the world have basically seized up. I think it's good news. Back to the market, though. If people are expecting Chinese officials to cut a stamp tax in half and expect that to rally the market, I mean, you're crazy. What that does is it rallies trading. So the market rallied 5.5%. It closed up 1%. You really need debt-fueled, consumption-led policy. And Xi Jinping right now has not shown an inclination to do that. So the market's given back all of its gains from the July Politburo. If you look at EM, which looked like it was breaking out right at the same time, it's run into a wall. And there's different reasons for it. I think you can overreact and say, hey, what they did over the weekend was a failure because it wasn't really attempting to be an economic plan.
Right. It wasn't anything sustainable. I mean, it's a quick fix. They need a policy bazooka almost guy in order.
And welcome back, by the way.
Well, I was just, Tim and I are thinking, but we're thinking the same thing because what I was going to say, but I will say it. I'm going to channel my inner John Sebastian, who was at Woodstock.
Welcome back.
Exactly.
Mrs. Cotter?
Well, no, Melissa Lee.
Yes.
Because, listen, although Tyler is, what do we talk about? Like Yellowstone or Mount Rushmore, and then we had CQ on Thursday.
Pantheon, whatever.
Yeah.
Yes.
It's still your rodeo here, and we miss you when you're gone, so welcome back.
Great to be back. Good to see you guys.
Talking about China, right, and bazookas?
Yes.
Well, hopefully that doesn't come to pass, but I'll say this. I think we continue to send people over there because I think our relations with the Chinese are probably the worst they've been since prior to the Nixon administration, number one. So that doesn't augur particularly well. However, and I think Tim is speaking to this, you can trade these stocks and Alibaba, in your absence, round trip went from 85 to 114. We went back to 87.5 or so last week. And here we are, 92 today. And we've been saying, this is probably an opportunity to trade the stock from the long side. Tim mentioned that last week. So although I don't think our relations with China get better anytime soon, I think the trading opportunities, the underlying stocks are there.
Yeah, and, the point that you make about, this 5.5% rally after this trading stamp cut tax, whatever the heck it is. I mean, there was a time, and I think we can all remember the not so distant past, where, we were waiting to see how China would open and close, and that would dictate the course of our future. Our futures don't even move often anymore. And I guess that's kind of a good thing. But by the same token, more importantly, I think the point that our Commerce Secretary is over there, I think it is saying a lot here because there is this tit for tat. We still do have lots of tariffs. We have these, bans, these export bans that are put on, and they're going to start ratcheting up. And they also know that the Biden administration, as they get into the election year and there's more pressure there, they probably have more leverage, right? Because if they think that things that they can do could slow this economy and change the course of our election in a very legitimate sort of way, I mean, this is just how this sort of international relations stuff sorts of work, kind of works. I mean, this is only going to get worse before it gets better. So if they can kind of set some sort of baseline, I think, for at least for the next year and a half or so, that's probably a good thing for everybody involved. The last thing we want to do is see China exporting their deflationary readings across the globe, because we could find ourselves, somebody said a debt-fueled consumption, we could find ourselves in a debt-fueled spiral lower as far as economic malaise is concerned.
Well, China can engage in a debt-fueled consumption. They have a lot of ability. China's balance sheet as a country is very, very strong. I agree with a lot of things you just said. I also think we are not as worried about Chinese economy in terms of its impact on the world as we were before. And in this country, Chinese imports as a percentage of overall imports in this country, I think, are back to where they were in 2003. They're 13.5% back in July. Mexico's over 15%. So if you think about the importance and what that meant, both in terms of GDP and also pricing power in this country, I'm not all that concerned about it. I also look at the CSI 300, so China's benchmark index, and how it trades is not necessarily indicative of how I think broader emerging markets and all other markets and the health of the Chinese economy. They're not one and the same thing. And as Guy said, you still can trade these. I mean, if you look at the KWEB, which is the Chinese internet ETF, which has some of the biggest some of the biggest internet companies in China in an ETF. I mean, it's actually up 16% over the last 3 months. It's underperformed the S&P by 11% in the last year. But think about what our market has done in the last calendar year. It's underperformed by 11%. That's not a disaster. And I still think China, despite all of their policy failings, and I think they need to do a lot more, seems as if they've taken hands off their own companies that were ahead of the government in terms of their independence. And that's, I think, the most important thing to investing there right now.
Mm-hmm. They do have leverage. I mean, the point that Dan was making about the election, that's very interesting in terms of maybe we'll come to some sort of agreement or policy détente until just before the election, Biden administration. Like, how convenient is that? But also the fact that American companies are probably more dependent on China than they were in 2003 in terms of profits, in terms of presence in China, Julie. And so while we may not rely as much on goods from China, the U.S. corporations relying on China as a consumer of services and products is probably a little bit greater than 2003 or the same, at least.
I think that's absolutely right. If you're thinking, if you're heading up NVIDIA, if you're, Tim Cook at Apple, it's a little bit like the parents are fighting right now and you're trying to figure out what your own destiny is. And so for them, I think it's very relevant what's going on in these discussions. NVIDIA has to bend over backwards in order to, defunction their chips in order to be able to sell them into this massive market. And, on our side, we are very, very thoughtful about how, what can happen with Taiwan Semi, because it's just such a critical linchpin in our own supply chains. So I do think there are places where it's really relevant, but I do think you do see some decoupling happening where, their economy can really struggle and we can still be okay. But I think you have to think about each company's exposure and what it means if we continue to have very frosty relations.